Hey guys, good morning. It is 8 a.m. May 14th, 2020. Welcome back to Equal Trading. Well, this is going to be really interesting to see. So, I guess there's a big argument as to what the head and shoulders look like on the S&P 500. Everybody draws their charts a little bit different. Um, I think there's a head and shoulders on the sideways consolidation horizontal, and there's a head and shoulders kind of on a momentum trend line that was broken for sure. I'm looking at Microsoft because when we think about the market, we think about years and years of this has become a giant casino, and I hate to say that, but it really has. You know, when you see guys talk about stocks, they'll say, look, this is breaking out of a base on high volume. This is, crossing above this moving. You never hear them say this company's making more money. This company's, expanding and they're in a great niche. This company is growing organically 30-40% a year. You very rarely hear that. So it's become this giant ecosystem of millions and millions of traders and hedge funds and money managers chasing performance. So once that system becomes so big, it becomes like a self-perpetuating, self-fulfilling kind of organism that looks for movement. And as long as the market isn't crashing, that money's going to stay in there, right? It's going to stay in there and continue to rotate around, chase performance, unless there's an unequivocal reason for the market to absolutely come undone. And we're right on the threshold of that right now happening. The main reason that I said buy the hell out of 279 on SPY, and I have a chart of Microsoft up here now because to me this is the general. This is the canary in the coal mine. This is everything right here. The reason I said the SPY should be bought last time at 279 and sold into strength is because it was looking different at that inflection point of 279 versus now. So now we have a problem. We have a 4.8 EMA crossover. The broader averages on the McCollum oscillator are starting to break, meaning that there's only a handful of stocks in the S&P 500 that are holding the averages up, and that is the Amazon, the Microsoft. Can those continue to do that and keep it from completely capitulating? They probably can for a while, but I don't know for how long. Because the problem is when you look at stuff like JP Morgan, we're going to call that JP Morgan's the gold standard in financials. Goldman Sachs, GS, and JPM are the two big dogs. You have a little bit of a support three touch, right? From the first move, they back checked this, right? Is this the bottom? Yes. Right here they said that's the bottom. Let's go, and they started to move up. And then, like I said, maybe things don't look so great on the other side. They've been using the virus as a wall of worry. You had rotation out of all these financial stocks, some of the Caterpillar, some of the Boeings, and the money was finding its way into the NASDAQ. So while this was gradually grinding lower, the NASDAQ was basically busting to the upside. In fact, some of the stocks in the NASDAQ were making new all-time highs, which told me that the money was really rotating out of all these and finding its way. Now, after rotation, you're completely saturated in those areas. What happens next? Do those areas become the panic areas now? And do they start coming out, or does that money continue to rotate? It probably continues to rotate for a while, holding those areas up like the QQQ. So what you're going to start looking at now is JP Morgan. Is it going to basically break below this little triple bottom? The low is 82.77, and we are right at 82.50 by 82.70. Most likely, by the look and the shape of the MACD here, this is going to hit all-time lows on JP Morgan unless something happens between now and the next 5 days, next 5 trading days. This does not look healthy. This does not look healthy. Can the Qs catch that too? Can they catch, no pun intended, this virus and start to come undone? I mean, they could. We always say, give me time over a certain level. Like, I was impressed, right? We broke into the momentum line. But it's usually give me 3 or 4 days over and I'll be impressed. And my line, I drew this to replicate it last night rather quickly, so it might be right along here. So we had 1, 2, third day it laid on the top of it, and then we couldn't hold it. So it wasn't really a continuation move for me. When you see 1, 2, 3, 4 days over this trend line here, it says, okay, this is a legitimate move, and you get the big move to the upside. So it's time over. It's the tug of war of sellers and buyers. Well, the buyers and sellers finally figured out the equilibrium broke to the favor of the sellers. So big question is the low yesterday on the QQQ 216.70. If they retest that and it breaks, you're probably going to head down to somewhere along the 214 area, low 214s. And that's going to get stuff like SQQQ breaking up to the 12s. These aren't recommendations, I'm just saying. So that's one thing to watch. The VIX. What happened to the VIX on the yearly? Well, it broke the downtrend line. It has retested it in this whole... Even as the market's pulled back, that was a sign. That was a positive sign for the market. Even here, it broke through, but it did it on an opening and then failed. So now it held the lower Fibonacci, and it broke through the descending trend line and retested it, and now we're pushing higher. So can this today get up to 38.60 on the VIX, 38.50? It certainly could. It's going to have to break the high from yesterday, which was 37.42, but we're pretty close. So the market's on the edge of coming unwound a little bit, but I think with all the traders and all the money in the market, the pullbacks aren't going to be 6, 7, 8, 15%. You're not going to see, most likely, you're not going to see the SPY completely crack. And my blue line is my head and shoulders, and that is in more of a horizontal positioning because we gave it the benefit of the doubt. We're looking for closes. I don't draw my lines on bottoms of candles all the time. So a close below that 281 would certainly do that, and we look like we're headed to that now. The low yesterday was 278.96, and I think I have a Fibonacci low that I was looking for actually is 278.35. So we could go test that 2,783.50. It's 2783.57 to be exact. Let's not split hairs though. It's going to be tough to do that in this market. With emotion, you can definitely extend past certain price points. I don't like to see stuff like Norwegian. I sold a little bit in pre-market because it was gapping. It's just, we're breaking down here, guys. I don't know what to tell you. I mean, 995, we're going to start going in and retesting lows here. I don't like to see this action here. I mean, we have lows, horizontal support at 824. We certainly don't want to see that. And then we have some lows in this area here at 1091, which we broke. And that's 1, 2, 3, 4, 5 areas that we've held for so long. We said this needs to hold above 1095 on a close, I believe. And we couldn't do that yesterday. So not good. It tells you just the psychology of the market when it comes to this virus. At some point, it's going to become I don't want to say non-point, but people are going to say, look, I got to get back to work. I'm going to take my chances because right now I'm dying. My business is dying. You know? Interesting to see, though. Watch Microsoft. Is it going to break that low? Can stocks like SHOP, SHOP, continue to hold in there? I mean, this closed up to the high end of the candle, right? I mean, is this going to break? You know, we need something like this to break the 698 area, 700 area before it starts to change the psychology of the market. And I'm not trying to base the entire market on SHOP, but it tells you that rotational money is still moving around. You know, or the biotech is going to come undone. LABU, we should actually be looking at IBB, but LABU's leverage. I mean, do we get a 4.8 cross on this? A 4.8 EMA. I'm not going to put up the moving averages, but I look for this. Okay, I'll just put them up really quick. We look for 4.8 EMA, so we're going to add a study set here. And you're going to see moving average, and it's a exponential moving average shorter term. And what you're looking for is an 8-4 crossover, moving average exponential. So here's your 9. We're going to adjust that to an 8. And then we're going to add another one. We'll edit this study actually. Actually, we'll just add one on there. If you see that 4 and that 8 crossover, and I'll show you in just a second, that is a short-term directional change, and that's what you can use for your QQQs. Sorry, my brain is a little fried this morning. And let's change this one up, edit study, and we'll make this a 4, and we'll change the color on it. This is what you want to look at in shorter term for directional changes. So if we look at something like IBB, it hasn't had a 4-8 cross, right? The 4 has not crossed over the 8. It crossed the 8. The 4 crossed over the 8 to the upside to begin this move, but it's been touch and go, and we like this expansion here. That's healthy. Right here, you have a touch and go as well, right? So here you still have a little bit of distance. When you're looking in shorter time frames, once that 4-day exponential crosses over the 8 exponential, it leaves it very vulnerable for a change in direction. I mean, we can see it in the SPY probably. I haven't even looked yet. But I'm sure if you zoom in, you will see a 4-8 crossover on the SPY. We had it here, right? We just started to have it, but at the angle, it said no go and rejected it. And then we've held it. Now we're starting to get a 4-8 cross. And Thinkorswim sucks for zooming in, but you get the idea. So that's what we're looking for. Is that going to start happening in some of the generals, the Microsofts, the Amazons, stuff like that? I don't know. We're close. We're definitely close. You had it short term in Amazon, and then it pulled out of it and started to curl up. But that directional move from there to there caused it to bend down pretty hard. But it got that rotational money again. So, definitely seeing moves and stuff like FAZ, the financials looking horrible here. And this is breaking above, this 3-day high channel that we've had here. This is your inverse of the financials. And this continues to grind higher. Probably breaking to the top of the channel on FAZ. That's a pivot right there because it kind of made a directional change to a low there. So we want to pull out that little high candle. So can FAZ go up and test like the 30-80, 30-90 area today? 30-70 probably. We don't like to chase those though. So today and tomorrow are going to be huge days. Is the market just going to pull back slowly with rotation, or are the Qs now going to give it up and all that money just gets sucked out of the market? That could be ugly, but we'll see. I don't know how much longer you can continue to have the Qs hold up. Look, I had a target of 195 on SPY, but I liked the way it was acting, so I was bullish. But then I changed when I saw the McClellan Oscillator, the averages. Some of the stocks that I follow, the real estate ones, I just sell my real estate stocks. If I get back in, I'll wait until the market has some type of, I don't know, not this crazy downward trajectory, maybe a baseline that I can work off of, and I'll probably go into an ETF that has a dividend, maybe something more in the medical buildings. Because it seems like we're having a change here, a permanent change. And you start to see infrastructure change on social distancing. That tells you that this is something that's going to hang around for a while, and this is legit. So this is a legitimate problem. And now we have JP Morgan breaking below that triple bottom. This isn't good. Eventually it might catch up with the Qs, and the guys that have made money there are going to pull out of the Qs too. And that could start getting hammered, I don't know that Qs can go against the grain for too long. So just something to keep an eye on. Some of the stuff that we're looking at is not good as far as what I'm, if we start to see the generals break down. And like I said, watch Microsoft, watch JP Morgan. We've already seen that break lower, and watch the VIX. And, can Microsoft retest yesterday's lows? If it retests yesterday's lows and breaks, it'll be interesting to see if it can hold this trend line around 160, 176.30. But this is a dangerous market here, you know. Do you just go long, you know, the FDN that we talked about with all the quality QQQ stocks, you know, in the NASDAQ 100, and short this buy, or not even this buy, short the Dow, you know? Look at SDOW. I have some of this just as a hedge. This thing's been moving up too, you know? We can't do a daily 1 year on it because it's a leveraged ETF, but how long can these things continue to go? I mean, we're just chasing digital currency here. We're just chasing numbers. I mean, should Tesla be trading, you know, at a higher market cap than like Toyota? How about then a higher market cap than what, Ford and General Motors combined? I don't know what the statistics are, but I mean, look at the daily on this one. On Tesla, it's been the 1 year. I don't know why my thing's freaking out, but you get the idea here. You know, this thing could come unwound. I'm not saying it has, but usually once that rotation goes away, be careful. So heads up on that. No stocks of interest yet this morning. I haven't really looked at anything.